Hey everyone, I just wanted to jump on and make a quick video about some of the big tech companies and going through their revenue mixes, given my thoughts on where they should be focusing on, where they're trying to focus on to grow their business over the next few years, and then ultimately just talking my thoughts across the board on the big tech companies. So we'll start on the left hand side here with our first one being Apple. What I find interesting is they've been doing so much work. They've launched, watches, AirPods. They're growing their services business like crazy. But with that being said, the company still does over 50% of their revenue in iPhones. So that's very interesting. I wouldn't go as far to say this is an iPhone company, but at the end of the day, it's 52% of sales is literally the hardware. Another 20% is from the App Store and most other services that are going through the iPhone. And then lots of the value in, especially their wearables business, is the ability to have a network effect with your phone and connect everything together with your phone from a health perspective and just like a data perspective, being able to text on your phones, text on your watch rather, and stuff like that. So I see a business that has like 80% of its revenue still very closely tied to the iPhone. So very reliant on that. I think the iPhone's a great product in a great spot, so it's not necessarily a bad thing. But I think they have a long ways to go before they are comfortably diversified in different types of product lines. But they're making ground, they're making progress. In terms of where they're focusing on and where I think they should focus more on, I think they're focusing very heavily on the services side of their business, trying to get more recurring revenue in their business, people paying for iCloud, people paying for Apple TV, stuff like that. And I think that's going pretty well for them. It's growing rapidly. It's already 19% of their business. It was not close to that a few years ago. So that's a good sign, even though it's still kind of tied into having an iPhone. But overall, the good thing about Apple is their unit economics and their business is so strong across the board. They don't have any revenue stream here that is losing money. All of them are very, very healthy margins, providing a lot of cash flow to the bottom line. So where I'd rather them like maybe try to innovate, bring in something completely different that isn't as reliant on the iPhone. The reality is whether they're selling laptops, wearables, iPads, iPhones, they're making great margins across the board. So this is a great business, very well run. But that's my main takeaway, just that they're very reliant on the iPhone still. Going across to Google, this is another interesting one because you hear a lot of sound bites on Google Cloud exploding and some of their other investments and stuff like that with like Android. Let's be real on this one as well. 70% of their revenue is directly from Google search and YouTube ads. And I believe this is like over 100% of their profits because they have crappy investments in other bets and stuff like that that have been burning money for a decade. So this is an advertising company. It would be great to see Google Cloud continue to grow and get to a spot where it's actually providing profit to the bottom line. They have Google Networks, this is probably Android and stuff like that. But at the end of the day, this company is an advertising company. You're investing in an advertising company. If you're investing in Google for their cloud or for Android, you're making the wrong investment because that's such a sideshow to what's really driving the company's growth and their profit and their ability to invest in those kinds of things. So you shouldn't be investing in such a tertiary element of the company. Not really a surprise on this one, but there are the numbers right there for you. 58% search, 12% YouTube. Huge business, great advertising business in my opinion, but it is an advertising business at the end of the day. Going over into Amazon. So this is one that was interesting to look at just because I'm a bit less familiar with their mix. It's interesting because once again, you see AWS, which is the big reason why so many people are invested in Amazon, super profitable, growing super fast, only 14% of revenue. And to be fair, I think it gets a lot of the buzz because it's a much more significant part of their bottom line in terms of the margins that that business has versus the rest of these revenue segments. So I think it's fair to focus a lot on AWS, given how important it is to the profitability of Amazon's future. But some of the other interesting sound bites here, subscriptions, this kind of surprised me. I thought Prime would be more than 7% of their overall revenue, but it's under 10%. Obviously, it serves other purposes like bringing people into the network, getting people to use the stores more often and order online more. But it's only 7% of the gross revenues. Physical stores, only 4%. I thought that would be higher too, with them owning Whole Foods and opening up all these different store concepts pertaining to Amazon in the physical space. But I guess it just goes to show how large their online business is between retail services, which is probably like, I'm assuming advertising and stuff like that. And then just their huge online store is still the main driver of the company. I don't think this is overly profitable, very low margin, but it's a huge part of their overall revenue mix. And they've built out so much scale to support it that it's almost required, or else if this dips in any big way as an absolute number, they're just going to be way over constrained on cost to supply it. So hopefully that this continues to grow as well. They get some more operating leverage out of their logistics chains, and they can actually drive some relevant profits here. But yeah, I think in terms of focus, AWS makes the most sense for profitability. Retail services with advertising and stuff is another area that's profitable that they should be trying to build out, which I know they are. And then on the online store, just making sure this doesn't, like they don't give up lots of the share and lots of the traction that they have there in terms of growth. So they can hopefully try to like leverage their operation to make this more and more margin accretive as time goes on. But this is probably the largest opportunity within their existing business to cut costs and drive higher margins, whereas AWS retail services are probably their expansion opportunities on profit. And then the last one here, Microsoft. Microsoft is just a beast. I love their revenue segments. It really speaks to how well diversified this company is. 30% in cloud services, so Azure, great business, very fast growing, very high margin. So if there was a business to have 1/3 of your revenue coming from, that's the right one. Office products, 25%. This is also a great business, very global, high moat, very well tied in, long relationships with all of their business partners and stuff like that. So that's a great business too. Windows is a great business, 15%. Gaming, maybe a bit more volatile depending on the consumer and stuff. But that's one that they're really focusing on, and they see a lot of growth with the potential acquisition of Activision Blizzard. So we'll see how that changes after that. But then you just have other little bets on so many other important spaces. LinkedIn, 6% of revenue. Search, so this is Bing probably, and they just made a investment in Chat GPT, which may make a bigger push into search ads, but that's currently 5%. Enterprise software, 4%. Microsoft Surface, which is like their tablets, 4%. Other devices and stuff they're working on, 3%. So they have so many different areas. Reminds me of Apple a bit in terms of all elements of their business are very accretive, very profitable. The only difference is, I would say, unlike Apple, they're not reliant on one thing in particular. They have a lot of different things they're doing, a lot of services they're providing across the board and across the company here, which is why I believe Microsoft does get valuation premium over Apple. So that's interesting to kind of just compare and contrast the difference between those two amazing companies. So just looking at it as a whole, a couple thoughts that I have. I think all amazing businesses, first and foremost. So I'm really picking on the top of the top here. But Microsoft, I think you notice a bit of a difference versus some of the other guys where, one, they're profitable across the board, a lot of different profit centers, not spending money on things that they don't have line of sight to delivering profit on. So not dilutive revenue mix or revenue segments in any means, and just like great high growing business segments. So I think Microsoft is the best position, and it's not surprised that I think they have the highest multiple as well. as a byproduct of that on their cash flows. Apple, similar to the quality of Microsoft's business, very profitable across the board, great business. They just don't have the same level of diversification as Microsoft, which is unfortunate. So that's why I think it's still a strong business, great business to own, but very reliant on the iPhone. So you have to keep that in mind if that's a company that you're invested in or want to potentially invest in. Google is a search company, and that's what it is right now. So great that they're trying to focus on some other growth areas, but ultimately, probably just the best digital advertising company in the world is what you're getting when you buy Google, and that's just what it is right now. And then Amazon, still trying to figure itself out, I think, but hopefully in the future, they're building their business in a way that they may be able to get closer to how Microsoft's business is right now if they're able to drive profitability, sustain profitability on their online store, continue to grow out their ad business, continue to grow out their subscription business, and then I'm not sure exactly what the plan is on physical stores, but they're in a lot of different really important segments from a revenue mix with cloud, e-com, advertising, subscriptions. I think they just got to figure it out a bit more. They have AWS figured out, but just on the other ones, how they can drive higher margins, better return on invested capital and stuff like that. And maybe 3, 4, 5 years down the road, we're looking at them more like we're looking at Microsoft today. And I think they do like more revenue because of the size of their online store. So who knows? Maybe they trade at a similar valuation as Microsoft, which puts them at a market cap way above Microsoft. So we'll wait and see. But that's my overall thoughts on these companies. If you have an opinion or you own any of these companies, let me know in the comments. Would love to hear from you how powerful or how high quality each of these companies' revenue mixes are. And also, if you like this type of content, please consider subscribing to the channel. I do lots of just quick news and reaction videos like this, but also look at individual stock analyses, going through my own stock portfolio. So if that would interest you, please subscribe to the channel, like the video, comment, say hello. Would love to meet more of you guys. And thank you guys for tuning in.